Meta stock ticker symbol META just reported earnings and the stock is up 5% here in the after hours and climbing on very, very good earnings. We're going to talk about it. We're going to go through everything and we're going to ask and answer the question, is Meta a buy right now? And as you guys know, I own Meta in my own portfolio. It makes up about 50% of my portfolio in total. So let's dive in. Before we do that, can you please go ahead, like and subscribe? It really, really helps me out. Let's get into it. Now, the reason why Meta was up 5% here today is because it literally beat and raised everywhere. Revenue expectations were for about $41.3 billion. Meta reported 42.3. EPS expectations for $5.28. Meta reported $6.43. So Mark Zuckerberg is in full throttle at the moment. Revenue grew 16% on the year. Earnings per share grew 36%. Guys, just for the record, this is nearly a $2 trillion company growing its earnings per share at 36%. Absolutely insane. These numbers are insane for a company the size of Meta, and it really goes to show the wide moat this business model has. Now, a big reason why the company is rallying in the after hours is because of guidance. Meta actually raised revenue guidance for Q2, saying they're looking to do 42 to 45 and a half. The previous number was sort of at the low end. That was kind of the midpoint. So Meta definitely with a guidance raise, and they're just not seeing any softness just yet. And that really goes to show maybe we might just get through this year with some very solid earnings. And this dip we got here in Meta, in the markets as a whole, could serve as a great dip buying opportunity. And for those stocks like Arista Networks, ABGO, Nvidia, Meta actually raised its guidance. Previously, we were looking at about $62 billion. Its capex guidance, now looking at $64 to $72 billion. I believe this is for the full year. Absolutely insane stats right there. So they raised their revenue guidance, raised their capex outlook. Looking at their margin profile, we did see gross margins tick up ever so slightly. Very positive to see that. EBITDA margins moved up ever so slightly as well. However, free cash flow margins declined. And again, that has to do with the amount of capex this company is spending with regards to AI data spend as well as Reality Labs. We'll talk about that as well. You could see that free cash flow actually declined on the year, 12.8 billion to 11 billion. So a major deceleration in free cash flow right there. However, net income increased significantly. This is also why earnings per share increased 36%, because we saw a massive uptick in net income to 16.6 billion from 12.3 billion. The company's balance sheet is also in very good condition. They're sitting on $70 billion worth of cash, accruing interest, about $49.5 billion worth of debt. So they do have a sizable debt load, but again, relative to cash, relative to their free cash flows, relative to their net income, it's an inconsequential amount. And also remember, these are quarterly figures, right? You have to multiply these by 4, essentially, figure out what the yearly revenue is. As you can see, the balance sheet is sort of just an aggregate measure where these are just a quarterly measures. Looking at some of the highlights, you can see revenue grew 16%, cost and expenses actually only grew 9%, and that is how you actually get a 27% growth in income from operations. And then with stock buybacks, you get that 36% increase in earnings per share. The effective tax rate did actually decrease this year from 13 to 9%. Very, very interesting. Operating margin did actually increase, as you can see, from 38 to 41%. And as a result, diluted earnings per share grew again from 2024. This is the trailing 12 months, from $4.71 to $6.43. And again, representing 37% or 36.5% growth. So just revenue growing with cost discipline and a lower tax rate means you actually get this figure right here. Very, very solid result from Meta. Diving into their segments, you can see advertising makes up the vast majority of their revenue base. So unlike Google, Meta isn't diversifying their revenue streams. They're trying to year with other revenue. This is mostly just Reality Labs, and they did make 400 million from this, but the vast majority is from advertising in their family of apps. That includes Instagram, Facebook, WhatsApp, and a couple of other apps as well, but those are the big 3 that really produce a lot of income for Meta, specifically Instagram and Facebook. That is the lion's share. Now you can see Reality Labs produced $412 million of revenue, but actually reported a net loss, probably because of capital expenditure of $4.2 billion. So this is a major increase right here from $3.8 billion in a loss to $4.2 billion. So this sector needs to go. We did get some good news earlier in the week. Mark Zuckerberg did say that he did let go of about 100 Reality Labs employees. So we could see this segment improve materially over the next couple of years, maybe even over the next couple of quarters, but we'll see how that plans out. This is a drag. And I mean, if they get rid of this segment right here, you could see a very nice uptick into net income, into free cash flow. And then total income from operations, as you can see, was 17 billion, excluding as the net of these two operational business lines. Now, looking at some highlights of the earnings report, family daily active people, this is a KPI they track, they call them DAP, was 3.4 billion. That's daily active users or daily active people. This was a 6% increase year over year. So more people are using Instagram and Facebook as time goes on. So ad impressions delivered across our families of apps increased 5% year over year. So this is actually volume. An ad impression is literally just the ad you see when you're scrolling through social media. When you look at that, that's called an impression. And when you have volume of ad impressions increasing 5%, plus you get 10% increase in the average price per ad, that's how you get that 15 to 16% revenue growth. You can see the net of these two right here is about 15%. Revenue grew about 16% on the quarter. So a very robust business model, just the pricing power Meta has because it's got very few competitors. I mean, Meta really only competes with, let's say, like TikTok, and I guess you could say YouTube, but really just TikTok and Facebook itself. It owns Facebook. So I wouldn't really say Meta competes against YouTube. I would say YouTube and Netflix compete along with a legacy cable television. And I would say that Twitter doesn't really compete with Instagram as well. I would say they're complementary, but very strong pricing power. It's incredible to see that just on pricing, Meta grew 10%. The capital return program share repurchases of common stock were 13.4 billion. That represented about 1% of the total shares outstanding for the trailing 12 months. And they paid out a dividend of 1.33 billion. And then the headcount was 76,000. That increased 11% year over year. So again, you could see that Meta is in a growth phase right now. To increase your headcount 11%, that is a lot. So if you want to buy Meta stock, what should you watch? I think number one, you want to look at ad impressions and the cost per ads. You want to keep a tight lip on these KPIs, right? You also want to look at CapEx spend and how that's translating into revenue. Also want to track revenue growth and then regulation. There is a ton of FTC and cases against Meta right now, being a monopoly, looking to divest their set of assets. I think that is something you want to watch. Meta's moat, I think, is wide and unchanged. In fact, after this report, you could say that moat is actually slightly widening and the Meta thesis is still intact. Nothing has changed with this name. I actually just added more on the back of these earnings. I bought a little bit more Meta, and that's because the stock is incredibly cheap. Meta trades at an EV to EBITDA of 12.2 times and a 22 next 12-month PE ratio. This is very attractive, especially when you compare it to names in the tech space. It's got a free cash flow yield of about 4%. This compares to the government bond yield, the 10-year yield of about 4.1%. So look, very attractive. And here at the highs, we were looking at 4.5% on the free cash flow yield. And this is free cash flow, right? There's a lot of capital expenditure that goes into free cash flow. I think it's far better to actually evaluate Meta on an EV to EBITDA basis just to get the real operating outlook for the business. Now, is Meta a buy, right? Let's go ahead and answer that question. So this is the valuation formula we use to determine if Meta is a buy. You can see, so we plug in the full year trailing 12-month revenues, assume 11% revenue growth with a 50% EBITDA margin. Now, I know it says net margins right here, but this is actually EBITDA, guys. Okay, I just made a mistake when creating the slides. And so you have EBITDA in 2024. Now, this is the trailing 12 months of 85.1 billion. That's growing to 143 billion by 2029. By the way, these estimates are actually below consensus. Consensus have Meta growing about 12% over the next 5 years, and the actual EBITDA margin right now is about 52%. So we're coming in below consensus, which is good. It's good to have that margin of safety. And then looking at an EBITDA multiple of 15, Now, if we go back here, you can actually see that the EBITDA multiple next 12 months is 12. The current is 15. And we're going to assume in 2029, it's going to trade on a 15 multiple as well. If you go ahead and do that right and assume 1% sequential share declines every single year for Meta, you subtract the net debt from the company, you then get a 2029 share price of about $1,050. The current stock price is $549, and then you adjust for the dividend yield, and that gives us a compounded annual return over the next 5 years of 14.23%. Essentially, you'll double your money over the next 5 years. So is Meta a buy right now? Yes, it is, according to this. Generally speaking, anything above a 12 or 13% compounded annual growth rate, that's what you want, because you want to outperform the S&P 500 by regards. But this is assuming everything goes very linearly. On the technical charts, you could see here that we have pulled back from the highs in Meta, which was, in the mid 700s, and we are still below the 200-day moving average. You can see these are the lows right here. So assuming with Meta, if we go ahead and retest those lows, that will be a great buying opportunity. But considering the resilience of this name, its wide moat, and the fact that it's still got a lot of growth ahead, it raised its guidance, increasing capital expenditure. It's looking to spend more, to grow more, and it's one of the leading names in AI. I think even just buying Meta right here with a 5-year outlook, I think we're going to go and retake these all-time highs sometime this year. So I would be a buyer of Meta right here. It's not expensive, especially considering all of the value you're getting for this name. So is Meta a buy right now? Yes, buy, hold, don't sell. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.